All right, it's Wednesday, and the Bank of Canada is going to announce today that they're holding interest rates. It was in my newsletter for a few weeks now. It's not hard to predict what the Bank of Canada is going to do. But we got some new data yesterday from the US, and it looks like their CPI data, as in their inflation numbers, actually got a little bit better yesterday. They came in lower than expected, which of course significantly lowered the odds of an increase from the Fed, which is the US central bank, later this month. However, if we look at the longer term projections, this is September's projections for the Fed, and there's under 40% chance that they're going to keep interest rates the same, and the rest of it is a potential increase by the Fed in September. Now, of course, there's lots of data that's going to come out. Global events are going to be occurring. Lots of things are going to happen between now and September. But just word to the wise that this is what is being projected by the markets as a potential increase in September by the Fed, which could lead to a potential increase by the Bank of Canada. Once again, all potential, right? Lots of data is going to come out. This has been shifting significantly because of the war, right? And of course, as I mentioned, you're going to have oil inflation, you're going to have diesel inflation from the war, which causes inflationary pricing. If you're thinking about what the Bank of Canada or the Fed's going to do, they're going to try and combat inflation by increasing interest rates, even though increasing interest rates doesn't always really combat inflation. A lot of the times, inflation itself combats inflation because it takes money out of people's pockets. Having high oil prices alone is a way of combating inflation because it takes more money out of your pocket every month, which means you have less money to go bid up prices. You get demand destruction from higher inflation eventually. You might have that, as I mentioned before, you have that spike in inflation and then things go down because people can't afford it anymore. Unless wages grow or there's more money in the economy all of a sudden. So anyways, so that's my 2 cents on the matter. Once again, any mortgage questions, anything, just shoot it my way.